Hey everyone, in this video we're going to be doing a response video to Jeremy's financial education channel on his video One Stock I'm Buying Now, March 2019. So this is just a response video and I'm going to be responding to Jeremy's opinions and his claims and his thoughts, and I'm going to share my own, and we can compare the two.
I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. And then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
Hey everyone, in this video we're going to be doing a response video to Jeremy's financial education channel on his video One Stock I'm Buying Now, March 2019. So this is just a response video and I'm going to be responding to Jeremy's opinions and his claims and his thoughts, and I'm going to share my own, and we can compare the two. So let's get started with this response video.
One Stock I'm Buying March 2019 edition. Welcome in, guys. Yes, this is the usual series, which is 3 stocks I'm buying. However, this month it is only 1 stock I'm buying, okay? We'll kind of go through why it's only 1 stock here in just a minute. But let's keep in mind, I could either have lied to you guys and just made up 2 other stocks that I really wasn't planning on buying, or I could just honestly tell the truth and be like, there's 1 stock I plan on buying. This is the only stock as...
One thing I noticed is Jeremy seems to stall when it comes to revealing his stock, and this is not Jeremy's fault. This is pretty much every YouTuber across the board, including me, and there's a good reason for this. Of course Jeremy will never admit this, but I'll tell you and I'll reveal to you why YouTubers do this. And the real reason why YouTubers stall when before they reveal something to you and they keep dragging it on is because of the way the YouTube algorithm and YouTube works in general. The more watch time and the longer a video is, the more the YouTube algorithm will share it. So it's better to have a longer video than a shorter video, as long as the watch time is also longer. And generally longer videos have more watch time.
1 stock I plan on buying. This is the only stock as of right now that I'm like, I have to buy this stock for this upcoming month. There's no 2 other stocks out there that I'm like, I've got to buy those stocks this upcoming month in March 2019. So I'm like, we can still do the video, but it's just going to be 1 stock today, guys.
We all know
There's some reasons why it is only 1 stock in March of 2019, okay? And why it's not 3 stocks like most months, all right? And there are a few different reasons. One is the markets are near all-time highs once again. I think the Dow is somewhere around 26,000. That's right around its all.
Almost at 1 minute in, and he hasn't revealed the stock yet. But you guys know why. I revealed to you why YouTubers do this.
high. S&P 500's near its all-time high. Nasdaq's getting pretty close as well. So being that the markets are at all-time highs, there just aren't as many good deals out there as there were just a few months ago or something like that. So which means the valuations are up substantially on a lot of these stocks. Like a lot of stocks have gone up 20, 30, some even
More than a minute in, he hasn't revealed it, but we understand why.
40% just since 2019 has started, okay? So meaning there's just aren't...
And by the way, I'm not hitting on Jeremy. Jeremy makes great videos.
There's flat out not as many good deals out there, guys. That's just being the truth, okay? Number two, I invested an insane amount of money from September to December when the markets were dipping. I put more money in the market than I've ever put at any point in my life that I can ever remember. So I was just investing like a crazy man in those months, buying every single dip, and especially in December when the market was just going down and down and down, I would put 5,000.
Buying dips is always a good idea. When the stock market falls, actually what's happening is everything's on discount. It's a great time to buy.
Period. So I invested a ridiculous amount of money basically in 2018 and especially at the back half of 2018. So meaning that I'm very happy with the shares I purchased during the
Almost 2 minutes and he still hasn't told us the one stock he's buying right now.
months, and now most of those shares are up substantially, and it's just kind of like probably it doesn't make as much sense to buy even heavier here. Number three, 2019 in general for me personally is kind of a cash stack year where I'm just trying to add the most amount of cash I've ever had. Usually most of my wealth is tied towards stocks, and in particular like 10 stocks in particular, right? And that's still the case, but in 2019 it's just a year for me personally where I just want to add a lot of cash around because I still think there's a pretty good chance that we could have it.
Alright, let's skip ahead and see where he reveals the juicy details.
But if I have a lot of cash around, I'm going to and that's why I was buying so heavily. Now when I just kind of look at most stocks out there, they're just
Alright, so it looks like, sorry for the lag over here, but it looks like
Gentlemen! You have bullet immunity! You're dead. Shazam.
ticker symbol is ELF.
Alright, he finally reveals it around 3 minutes and 40 seconds. 3 minutes and 40 seconds. Interesting. Alright, so Elf, he's talking about the company Elf. He's interested in buying Elf. Is Elf a good idea? That's what we're going to be discovering in this video right here. First, let's see what Jeremy has to say.
So stands for eyes, lips, face, cosmetics. It's a cosmetics company. I know that sounds crazy. A small cosmetics company. Jeremy's buying a small cosmetics company. Why do I think I'm going to make a lot of money on this stock over time, okay? Well, right now, it's a stock somewhere around $7.50 type range. It's got about a 300.
Jeremy's trying to be the next Kylie Jenner. Just kidding. Or the Kardashians or something. I'm just kidding.
$80 million market cap. So once again, this is a very small company. This is actually the smallest company now I own. Pretty much far and away, I think the next smallest company.
Let's get to where he tells us his reasons, because right now he's just describing the company.
I see a lot of US that helps obviously, okay? And this is in a very right now, you look at somewhere like a Target store. At a Target store, Elf gets around 10 feet or so. Much easier, okay? So it helps with the sell-in and the sell. Touched by Elf, they get a very small amount of their revenue from worldwide versus US growth. So I think worldwide is a huge expansion opportunity in the future years, okay? Also, they focus on affordable quality products, all right? These aren't just like cheap products. Like these get great reviews. Like I've watched
Alright, so it looks like he actually believes in the company itself. He believes he believes this is the company that's going to expand and everyone's going to like this product, and seems like he believes in this product. I'm guessing his wife might be into this, you know? I'm only assuming.
Ridiculous amount of like makeup YouTubers and whatnot, and they have a lot of great things to say about the quality of their products.
Alright, so he believes in the company.
That's a very, very good thing, and that's another huge reason why I'm bullish on this company, and I think I'm going to do great long term, is even in the next recession, I don't think this company's going to be hurt. Bonuses, okay? So the CEO's compensation for the most part is going to be tied toward getting the stock up substantially in years, getting this business turnaround, and getting the stock back. Hiring a huge name celebrity. The huge name celebrity, yeah, you could go film fancy commercials that also cost a fortune and things like that, but you can actually thrive in the next recession. Not only will they not be hurt, their business, in my opinion, will actually pick up a lot.
All right, so it looks like okay, so it looks like Jeremy just believes in the company, and he believes in the company's products. He believes that this company can market its products during the bad times, and it can go global, international, and with these products. So he believes that everybody will like this products from all over the world, and he's a strong believer in their products, from the reviews and the ratings and all that good stuff. But Jeremy doesn't necessarily talk about the company's performance. This is what we need to be looking at. The performance of a company, the history of a company. We need to look at what's going on with the stock market. The stock market says it all. The charts, the graphs. We need to be looking at all these things. See, when we look at Elf, ever since it came out, it went public, right over here, it's been crashing ever since. There's been no sign that Elf Beauty is going up. No sign at all. Like, look at this, guys. It's going straight down. What makes you think it's not gonna go more down? It looks like it could hit $5, $4, $3. It looks like it could completely go out of business. I mean, yeah, it could have good products, but many products are good, I'm sure, that are out there. I'm sure it's not the best product out there, so like what is he talking about? Okay, sure, it has a positive PE, positive earnings per share, but we can see that the outflow is much larger than the inflow for the most part. And when we look at the analysts are not even bullish on this company, and the analysts are usually always bullish. The analysts usually overextend and are bullish on for the most time, except when it comes to like Tesla. They have different mixed opinions with Tesla. But anyways, when we look at Elf Beauty, We can see it's almost at its low point, nowhere near its highs. But now when we look at the chart, we can see that the pattern that Elf Beauty shows is it's been in a downward trend. Looks like it's going to continue on this trend, this downward path, as we can see in the bottom over here. We look at the financials. We can see the investing, and also the financing has been headed downwards. The operating has been excelling, but the investing and the financing slightly has been on a downward trend. We can see the debt asset ratio has been on a downward trend, and we can see the net margin has been on an upward trend. So this company does not necessarily have bad fundamentals, but the issue for me is, for the most part, is the graph. There's no sign that there's no time in this graph that it's ever gone up. You need to have at least one sign, like if it picks up and it goes above maybe above $13. If it goes maybe above $13, then that'll be like, whoa, now it's growing faster than it's ever been growing. But now we don't have no signs. It could just keep going down. And when Jeremy says he wants to put the majority of his portfolio into this, that is scary. This is another GoPro situation ready to burst, ready to happen, ready to explode. This is what's going on. So hey, it's his money. Personally, I would not invest in this company unless I see that it has been going up. I see that right now there's no sign that it's ever gonna go up. Never showed a sign. Never, not even in the past. Like, maybe they're just gonna keep on going down. Maybe that's just the way this company rolls, and maybe it'll go out of business or become a penny stock soon. Who knows? It's totally possible. So anyways, there's my review. Smash that subscribe button, hit that like button, and check out my videos. And thanks for watching. We can see that if you would have invested from the start, from January 2017, if you would have took $10,000 and you would have invested it in ELF, versus if you would have invested in the Vanguard S&P 500 index, what you would have gotten is you would have lost $8,000 with ELF. But if you would have grown money with the 500 index, the issue with ELF is not only is it 50% correlated with the market, but the Sharpe ratio and the Sortino ratio are negative. This is bad news. It grows on average of negative 44%. On average, negative 45%, close to negative 45%. This is not good. This is what I'm talking about. And then Jeremy says it won't be hurt in a recession. People stop spending in a recession. People stop hoarding their money. That could really hurt this company bad, and this company is 50% correlated with the market. This is why I disagree. I wonder what got Jeremy inspired into this company. Just because it's affordable? Just because it's cheaper now than it's ever been. It seems like it's gonna keep becoming cheaper. Anyways, thanks for watching, guys.
Hit that smash button. Hit that like button.
And see you next time. We can see that ELF is cheaper than its competitors, and it has an upside to this price target, and it's also profitable. So that's the good news about ELF Beauty. The bad news is that there's no growth forecasts. So this is a sign of weakness in this company. On top of that, on top of no growth forecasts, it offers no dividends. Zero. Zilch. Nada. Zero. So that's one thing we can see about ELF, the ELF company. We can see that the net debt levels are 2.3% of the operating profit. 99 million in net debt. 99 million. That's almost as much money as I have. I have a lot more than 99 million, so theoretically I could just pay off their debt. Maybe they should put me on board. You can see the forecast sales is expected to not make as much as it did in the last 12 months. So there's weakness already demonstrating in this company. We can see the forecast sales at 252 million instead of 267 million. This is a sign of weakness. The good news is that it's showing positive 7.3% return on equity. This is one thing we like to see in a company. This is good news. Good news. So there you guys have it. Hit that subscribe button, smash that like button, punch that subscribe button in the face, and thank you for watching.
One thing about this company is that they've a certain proximity from the personification of redundant axioms presupposed upon